Hi there guys, a very good morning to all of you all who have joined us live on this broadcast on Moneycontrol. You're watching Opening Bell with me, Stacy Pereira, and as usual I'm here to take you through all those news and cues that you need to be watching out for and that could go on to impact your trading day. So let's get you a quick recap of where we left off. Of course, it is a truncated trading week. We were off yesterday, but for the week that went by, we also had an extended trading session, a special one on Saturday, where we did see the bulls pretty much take control back on the Lal Street, we would say. On May 18th, we did see the benchmark indices closing in the green, although rather flat because of those thin volumes as well being a Saturday. We did see the Nifty closing at 22,500 for the first time since May 2nd, and experts are saying that the index is rather going to be moving towards that 22,600 to 22,800 levels at least in the coming few weeks. And of course, there will be more stocks that are going to be in specific, and that should perhaps be the strategy that one should adopt in such kind of market when we still have that big D-Day of June 4th for the election results awaiting us. So all of that is what we're going to be discussing on how one should be trading in this kind of market. But before that, let me take you through all the top headlines. Stocks closed mixed on Wall Street, the Nasdaq hitting an all-time high on hopes of a Fed rate cutting happening quite soon. The S&P 500 also closed higher, while the Dow Jones index closed with some bit of losses. And Asian markets traded lower despite a largely bullish handover from the street. The GIFT Nifty is also indicating a rather flat start for the Indian markets. And gold surged to record highs, traded about $2,400 an ounce. Silver too has hit a 11-year high as a Fed rate cut expectations are lending support to these metals. Copper prices too have hit a record high above $11,000 a ton on expectations of shortage in supply. And India's banking sector report combined annual profits of over 3 lakh crore rupees for the first time in FY24 for the PSUs. We also saw PSU banks report a combined annual profit of 1.41 lakh crore rupees. The Prime Minister Modi has called this a remarkable turnaround in the last 10 years. And the chief prosecutor at the International Criminal Court or ICC seeks arrest warrants against Israel's Prime Minister Netanyahu and the leaders of Hamas. Yahya Sinwar accuses Israel and Hamas leaders of war crimes and crimes against humanity. The US president sides with the Israeli Prime Minister, calling the request for a warrant against him to be outrageous. Well, those are pretty much the headlines, and we're going to see developments come from even what is happening at ICC as well as the Iran president that died in that copter crash. There is the funeral in India too is marking that demise of the president. But let me also take you through some of the F&O cues that you need to be watching out for. Well, according to the weekly options data, we did see 23,000 strike continue to own that maximum call open interest. The maximum call unwinding though was visible in that 22,400 strike. And if you look at the put side, the maximum open interest there was observed in the 21,500 strike, and there was hardly any put unwinding that we could see between right from 21,500 to 23,500 strike. So if you look at the PCR, then the Nifty put call ratio, that is pretty much indicative of what the market is looking at right now. That one rising just about a basis point, 1.24 on May 18. That was that special session. Compared to the 1.23 levels that it was in the previous session. This means that the put options are getting sold more than call options, which generally indicates a firm bullish sentiment, at least for now in the market. If you look at the F&O ban, well, NSE has retained about 13 stocks in the F&O ban list for May 21st. Now, these are stocks like Aditya Birla Capital, Balram Chini, Bandhan Bank, Biocon, GMR, Infra, Granules, Hindustan Copper, the likes of a Piramal Enterprise, SAIL, Z Entertainment, all of them continue to be in that F&O ban list. As for the fund flows, well, as of for what happened on Friday, well, the FIIs we did see became net buyers. Now this after 11 consecutive sessions, we saw FIIs buying about 1,617 crore worth of shares, whereas DIIs also brought in an equal amount, about 1,556 crore worth of shares. And this, remember, turning buyers for after 11 consecutive selling sessions it was for the FII. So we're seeing, perhaps we could say, renewed momentum coming in from FIIs, although for the month of May they have been net sellers altogether. But in terms of stocks that will be reporting their earnings today, well, BHEL will be in focus, Metropolis Healthcare, Aether Industries, GPT Healthcare, Greenply Industries, Ircon from the railway pack will also be announcing its results. Now, the India VIX index, that one has been seeing some bit of swings, and in fact, the market participants need to keep an eye out for this kind of volatility, especially because it has been seeing, huge spikes as well as drops. Now, again, it has moved above that 20 mark on a Saturday in that special session. Generally, rising volatility puts the bulls quite uncomfortable, although the sentiment on the street is still showing that there is that positive momentum. But the VIX, if that is something to go by, that fear gauge now has risen by about 3.67% on that Saturday session, coming to that 20.53 levels versus the 19.8 levels it was earlier. Well, all of those do seem to give us some fair indications of where we could be cautious, what we really need to be watching out for. Of course, like I mentioned before, we do have a big cues that we are awaiting. We are almost through with the 5 phases of elections as well, so just another 2 left, and then we are going to have perhaps some bit of stability. At least that's what the street is hoping, perhaps more of that even factored in. But let's get discussing and see what really we should be looking out for and what should be the strategy and stocks that should be in your focus at this point. And joining me for that is Brijesh Ail. He's the head of technical and derivatives at retail research at IDBI Capital. Good morning, Brijesh. Always a pleasure to have you with us. First, let's get a start on the levels that we need to be tracking. It is a truncated week. Last week we saw about 2% of gains for the Nifty. So do you think this 23,000 now is in sight, or should we just still be cautious at this point because there could be any kind of correction? Of course, yesterday's low voter turnout again happened to impact sentiment, or do you think that could actually play out in today's session? What would be the levels for both the Nifty as well as the Bank Nifty, and the strategy that you would say for this week?
Hi, good morning. So the view for the index is positive. One thing for sure, because the way we recovered in the last week, the levels of 22,300, which was a major resistance, that has been taken out very strongly, and we saw a very good close during the last week. 22,500 was the immediate hurdle from the derivatives point of view. There was a slightly call writers were active, but then, as you said rightly, I believe this is a truncated week, but then still I believe the levels of 23,000 looks quite promising. We should be heading toward those points. Whatever the corrections we see, maybe 100, 150 odd points in a day or two, I think that should be viewed as a buying opportunity. On the way down, 22,300, which was earlier resistance, is now likely to act as a support level. And this level also coincides with the level of 50-day moving average. So I believe this maybe just in case if it breaks, there can be a puzzle of another 50, 60 odd points plus minus can be there. But roughly, I believe this levels of 22,300 and 22,200, that can be the lower side demand zone when again the buying should pick up. And as you said, maybe if it doesn't come this week, then probably for sure 23,000 should be the levels we should be keeping a watch on for the next week. This would be the view for the Nifty. And same thing if we look at the Bank Nifty on Saturday, the close for the Bank Nifty came over 48,000. So 48,000 is the immediate hurdle. Maybe today there is a slight negative opening for the Bank Nifty, but then in next couple of days, whenever the Bank Nifty scales up to 48,000, I believe there will be a huge short covering the market, and that should take Bank Nifty by 1,500 points on the higher side. Today's correction again in the Bank Nifty closer to 47,800. There is a demand zone. This 270 points, maybe it will get settled in the first 1.5 hours trade, and whenever it comes close to 47,800, again the buying trade should be looked in the Bank Nifty is what I believe.
Right. And what within the components of the bank Nifty would you be suggesting at this point? Because you're saying that there could be pressure for the index, but would this be among the PSU pack, or do you think that it would work out in the likes of, something, an HDFC Bank or an Axis Bank that have seen a good run up so far? So what would be the components that will be really impacted?
So specifically PSU Bank, if I clearly see from the data point of view, I think PNB and SBI, there is a long built up from the weekly trade setup. So I would be taking a opportunity in this particular stock. Additional to this, Kotak Bank is something which has gained a very strong momentum over the last week. So I think that momentum in the private sector, Kotak, and then if I need to keep a watch, Axis is at the verge of giving a breakout. So Axis, any time when it starts closing trading above 1150 mark, the momentum will seen in Axis Bank. So I think whenever the bank nifty starts moving, Axis and Kotak will be the two from the private space, and PNB and SBI from the PSU space. So I think this should be the stocks which one has to keep a watch on.
Right. In fact, let's talk about more banking stocks that could be in focus. That's because we did also hear from the RBI, which has, really cracked the whip on this whole co-lending deals that are taking place. Now, this normally takes place between two, either a banking partner and an NBFC mostly. And the RBI has always, put out a cautionary note. Even last time around there was something similar that they had spoken about, especially when it comes with the credit cards that these co-lenders offer. This time again we learned that RBI has written to about 4 banks advising them caution on how they conduct these co-lending activities. In fact, the regulator is concerned about poor underwriting standards of these loans that are being put out. They've also highlighted issue on asset quality of co-lending partnerships between these banks and NBFC. So which is why perhaps we are going to see some bit of action take place there in that space, but that will definitely, we'll want to see how stocks are also reacting to this kind of news. Well, we are barely 10 seconds away from a market open, and we'll have to wait and see what direction we are really turning to, because we did stop at that 22,502 to be precise, that level 504 levels, as well as even for the sensex we were above that 74,000 mark. But there on your screens we are just tad bit below that 22,500 levels, not really sustaining, at least at opening bell, just about 0.1% point of pressure that we're seeing for the Nifty 50. Even the sensex not managing to hold on to that 74,000 level. So there you are, both the sensex and Nifty seeing some bit of pain, rather flat for the Nifty on expected lines, one would say, because most of your Asian markets are also trading with some bit of negative sentiments at this point. But the bank Nifty also, like we were talking about, that one seeing about close to 70-80 points of fluctuation there, but we could expect a further drop as well for the bank Nifty 2 in today's session. But the mid cap and small cap, now those ones are the ones that were holding out, at least in most of these sessions. Even in the special session that happened on Saturday, we did see both the mid cap, small cap hit new record levels, but today both of those indices also perhaps mirroring what they are seeing the benchmarks do. So in tandem there, both the NSE mid cap, the NSE small cap, as well as the Nifty mid cap, they're both trading under some bit of pressure. Your IT index too is seeing some bit of in the red this morning. So the IT index also in some pain. Pharma is the one holding out, and there's some good reason for it. We're seeing good brokerage calls coming there for Zydus or the likes of a Lupin that has got and US FDA approval. So all of those playing out well for that counter. So pharma as they're holding up. You have the Nifty FMCG one, which is also seeing almost 0.5% of losses there. And in fact, even on that special session, it was the losses. If the FMCG one, only one holding, having some bit of pressure there. So the FMCG index too among your, losers. But let's also look at who are your top gainers and losers. Then on your screens now, you'll see the top Nifty gainers there. ONGC BSE, of course, holding up there after its results that came out. Hindalco from the metals pack. You also have Tech Mahindra, even though the IT pack is seeing some bit of pressure. Tech Mahindra holding out. Apollo Hospitals, Coal India, as well as Tata Steel. So steel names there, right from Hindalco as well as Tata Steel among your top gainers. You also have a Kotak Mahindra Bank, BPCL and Bharti Airtel among your top gainers. But also let's look at the flip side, and you have the Nifty losers there. Nestle India now, after that good rally that it saw on Saturday, of course that counter was up close to 3% on Saturday. So Nestle there, that on the back of that royalty news that it got, that the shareholders here in India rejected that the proposal that was put out for increasing the royalty to the Swiss partners. So the other Nifty losers, M&M, Axis Bank, Ultratech Cement, they're coming under your laggard list. HDFC Bank, HCL Tech as well as TCS. So you have a mix of banking name as well as IT names among your losers, whereas a couple of those metal names playing out well in terms of gains coming there for Tata Steel as well as Hindalco. Brijesh, back to you, and let's talk about metals specifically, because there is news momentum. We did have a couple of earnings that came across last weekend, JSW Steel being among them. Even though it saw a huge drop in its profits, there are a couple of brokerage reports that have come in on the same. So how are you viewing the whole metal pack, and is there enough reason for specific names within this whole basket, and what would you be suggesting if you had to give a pecking order within the metal pack?
Yeah, so basically metals directionally, we believe there is a sector rotation, and metal is something like the way we talk for the auto and banking space. Now the metal is something which is coming into focus. The rally which we have seen over the last couple of weeks, I think metal will be the kind of leader. So definitely, as you spoke about JSW Steel, the structure for the JSW Steel is quite very strong positive, and I won't be surprised if I see 1,000 plus level in the coming months. So the view is positive. Somebody wants to take a trading view can also take a trading bet at this price, even though after the result the stock is not corrected the way it would have been corrected. So I think it's a clear-cut buying opportunity. From a trading perspective, 875 would be the stop loss, and we can easily talk of 925, 930 at least for this expiry. So one would be the JSW Steel, and one which is I'm liking the most is the Hindalco. So it never corrected, and the way the long-term charts are there, I think this continuation of momentum will be there. Hindalco should be anytime soon, should be testing 750 levels in the coming months. So whenever there is opportunity in Hindalco and whenever the market corrects, I think Hindalco can be one from the metal space, which should be aggressively viewed for the long positions. Rest net the bias is positive for the metal index. So with stock specific approach, Hindalco and JSW should be the immediate bet, and then Tata Steel and SAIL is also, I think, likely to perform with the overall sector.
Right. So Brijesh's picks are Hindalco and JSW Steel, at least if it comes to the metal pack. Well, let's talk about some more PSUs. And of course, BHEL had come out with its earning over the weekend, and now Jefferies has put out its brokerage call. They have a buy call with a target of 305 per share. In fact, the Q4 EBITDA is about 30% above expectations, as both the margins as well as revenues have surprised. The company is a market leader when it comes in terms of the domestic defense electronics, and the company has also benefited quite a bit from the spending on the Army, Navy as well as Air Force. The non-defense progress though remains muted in the last 12 months, and Jefferies has gone on to say that the FY 24 to 26, they see about double-digit revenue growth. This based on the order book as well as their pipeline. The margin strength is what gives them confidence on profitability sustaining through this time. That is what Jefferies has called on BEL. But interestingly, Brijesh, your view on PSU pack today. We also have BHEL, which will be coming out with its numbers. So from the likes of a BHEL or the others in this, would you think that there is more momentum there for them? Even though we have the elections and PSUs have seen a different kind of rally in this run up, but but how would you be looking at, or what would be the sectors within the PSU pack that one should really be looking at?
See, I think till the election results are not declared, I think this momentum will be there. Taking a fresh entry in the PSU, any stock is not visible because the risk reward ratio is it's not there. What max we can do is like I'm of the opinion that we should be starting doing a partial profit booking of in case of BEL, which is a 281, which has already seen a gap up opening. The risk for the BEL comes at 220 level, so it's very far from the current price. So and this gap maybe sooner or later will get filled in the near term. So whenever it comes to BELS at 280 levels, I would advise closer to 290, 295, maybe 300 levels. Start booking the partial profit booking in all of the space. Levels would be from the individual point of view, but then my sense is that once this election thing and this May month is over, June, probably June, mid-June, there can be some profit booking in the market. Even if you look at the Nifty, same thing, one should keep a watch on the Nifty also. 21,800 is a major support for the index. And if that levels are broken, then there can be a good amount of profit booking in the market. So one has to keep a watch on those points. And this area also, we have hardly another 10 days in the hand. So not a fresh entry can be made, but then wherever there is a good amount of, I think everywhere, all the space, there is a good amount of profit, at least 50%, 50, 60% profit booking should be done. Maybe the long-term trend would be positive, but after we see some reasonable correction, I think with selected stock, we can make a re-entry. So BHEL specifically, I think 290, 295, one should start looking to book profits. Even the BHEL, which has rallied quite a long. So whenever there's a correction, again, the momentum is seen in the BHEL also. 300 is the level. So why I'm saying 300? Because previously during this month, at 300, there was a lot of shorts where the call writers were there. That position has been taken out. So on the way down now, definitely the 300 will act as a support. In case of specifically BHEL, so if 300 is broken, then we have to cautious, and then obviously, as I said, slowly profit booking should be done. So the trailing stop loss or maybe the immediate support level for the BHEL is 300. So we'll take a cautious view only when 300 is taken down on the any of the trading session.
Yeah. Well, right. I hope that also answers Srivardhan Gupta's question on Bharat Electronics, because that counter is seeing some good up move there, 8% of gains on the back of its results. So that's what you can see on BHEL as well as BL in today's trading session. But let me also quickly answer a couple of queries and also keep reminding our viewers that send in your queries on our live feed, and we'll try and take it up with Brijesh right now. Let me get Debu K's question answered. He wants to know the view on Polycab as well as Gravitas India. So maybe you can take each one, Brijesh, and give him what should be the strategy for both Polycab as well as Gravitas.
Yeah, right. So Polycab is in uptrend, and I think since Monday 13th, the stock has started moving up. So structure is positive. So if somebody is having a position, I think can hold on the position. There is a probability that 6,800, 6,900 can be seen on charts. So that would be the higher side. Don't make a fresh entry because there is no risk reward ratio. On the way down, 6,100 is the immediate support level. So if anytime the stocks break 6,100, I think one should exit the position, or even it is very wise to take some profit at this level, because the maximum extension of this move can be seen towards 6,800, 6,900 mark, which we are almost there. So partial profit booking should be done, and 6,100 would be the support or demand zone below which the stock can see some good amount of profit booking. In case of Gravita, so Gravita is about to give a fresh breakout. It does not perform on the last Friday session. There was a volume breakout. It has also come in our list. So the trigger for the Gravita is 990 mark. So as and when the stock strongly closes about 990, the previous resistance is 1100. So that move is due in Gravita. So somebody who needs to wait for a confirmation can take the call about 990, or somebody who would like to take a risk at current price can also take an entry, because in last session, we has seen some delivery volumes which has been seen at the current level. So it's a buy. A technical trigger is about 990, but somebody can take a chance. 1100 would be the upside target for the Gravita.
Right, 1100 an upside target that Brijesh is putting there for Gravitas. But let me also take this conversation further into the broader spectrum of things and how India is performing amidst its peers. And in fact, we've been seeing some great momentum from most of the global indices as well. It's not that just, the Nifty touching new highs in new weeks. We've seen the Dow touch that 40,000 levels. Before that, it was the Nikkei that, touched new highs. The FT, the FTSE as well saw some record closing levels. So most of your global indices also are trading. About 14 out of 20 have touched new highs in the last at least 2-3 months itself. So where does India then stand among these global players? Let's discuss that with Kranthi Bathini. He's the equity strategist at WealthMills Securities. Good morning, Kranthi, and always a pleasure to have you with us here at Moneycontrol. I was talking about how we've seen most of these global indices have different reasons to be hitting new highs, but where is India then among all of this? Where does India start? Are we seeing some bit of that takeaway that has happened from Indian markets towards China as well, because the valuations there too, and the government has been putting out stimulus packages and trying to make that market look quite attractive as well. So where do you think India amongst all of this really stands?
Stacy, good morning to you. It looks very interesting with respect to India is concerned at this point of time. And the main key part right now what we look at is, as you rightly mentioned, the various other equity markets across the globe, Dow hitting 40,000 and various other markets also performing well. But among, we compare the Indian markets in the emerging market space and also the top market space, India stand to be unique at this point of time, given the growth prospects and also the earning visibility and also the policy continuity it is concerned. India looks extremely good at this point of time. You are absolutely correct in terms of the equity withdrawal, the fund withdrawals are concerned. Some kind of hot money that has been exiting Indian markets at this point of time. But in the long-term prospects are concerned, in the coming next few quarters, you will see the kind of reforms that are going to take place in India. And also, there is a lot of long-only money has been waiting in sidelines to enter into the markets once the clarity on the policy continuity and also the reforms are going to emerge in the medium to longer term. So India the story looks interesting at this point of time, and it remains one of the favorite destination for the majority of the foreign portfolio investors. We do see here and there some kind of knee-jerk reactions of the hot money that is getting adjusted. But in terms of the long-only funds are concerned, they are quite bullish about Indian markets at this point of time.
Right. So longer term perspective is where most FIIs at least are looking at India and perhaps going ahead and parking their money. But let's talk about a couple of block deals that took place in the earlier part of this session. Well, we did see Indus Towers. Now, foreign institutional investors or shareholders are likely to have sold a stake worth of 270 crore rupees in Indus Tower. Now, the block deal is expected to have involved about 80 lakh shares to the tune of 270 crores. Another one that we could perhaps get confirmation on the block deal is of CG Power and Industries. Now, here we are being told that the stake was somewhere worth of 425 crore rupees. This too again in the block deal, perhaps about 65 lakh shares that could have traded hands. And in fact, we are getting a couple of queries too that are asking on Indus Towers. So maybe Brijesh can help Pankaj, who's asking the view on Indus Towers, especially after this block deal. What would be the levels or target and stop loss that you would suggest to him?
So CG Power, I think there is a profit booking, clear-cut profit booking. There is a very decent rise from the level of 500 mark, and then it almost went up to 660 in the last week. So after this, there is, I think this what we are seeing is a profit booking. At current scenario, the stock is due to test the levels of 590 on the lower side. So I think that would be the, if somebody is having a position, I think one should do the profit booking closer to 590. We can re-enter because this would be the range for the next couple of months. I don't see CG Power going to 750 or 800, something like that. So somebody wants to play this 600 to 750, this move. If somebody wants to play this, I think that can be a trading opportunity. Directionally, if somebody is holding a position, it would be wise to take some profits because at least from the current level, we can talk of 590, 585 levels on the downside. So profit booking is visible.
Right. What about Indus Star? Because that one also is likely to have seen some, big shares trade hands today. So Indus Star, what's the call on that?
So, okay, so I think on last 14th of May, there was a buying and there was a bull candle formation and the low of that particular candle is 328. So somebody wants to take a risk and go long with the stop loss of 320 below 328. So maybe 325, 320, whatever those point. It looks like this all-time high of 370 mark, 366, 370 mark can be retested or it can be slightly go further. So that's a trading opportunity with a strict stop loss. I think someone can take that long bet.
Right. Kranthi, let me come to you then and ask you about the IT pack because, across in the US, we are seeing a lot of exuberance there on how AI is really changing things and what they are expecting tomorrow. We are seeing big results in terms of Nvidia, which is going to be putting out its numbers, and a lot of hopes there for the tech companies, the big tech companies in the US. But how does that really reflect on what we are doing here in India? We've seen most of in terms of their Q4 earnings, all of them did speak about how AI is that focus area. But what really, how much is that going to, change? Do you think AI is going to be that game changer now for the tech companies and, not the other factors of where they've been spending, especially when it comes to US and how they actually allocate those kind of monies towards companies here? Do you see that changing, and should one take a contra call now despite the underperformance in terms of the earnings when it comes to IT, and which are the stocks that you would prefer among the Indian IT pack?
Yes, Stacy, if you have to take a contract call, definitely one need to have a longer term perspective because contract calls only works in
Well, I guess we're having a bad line there with Kranthi, but let me ask Brijesh that then. Brijesh, IT pack today, a couple of those names that are figuring out in the losers list, we would say, at least the likes of TCS and others, the bigger names coming under, some bit of pressure. So how should one be looking at the IT pack, or, particular stocks that you would see as buying opportunities perhaps in the in Indian IT tech?
I think there are only two stocks which I can clearly say we can take a chance. One is the emphasis. So that is one, and another one is the Tech Mahindra. So these are the clear cut. There are two stocks which has been holding in today's decline. So that again, we are not having any positional view. Maybe there can be easily 3-4% of a trading bet from the week's point of view. So emphasis and Tech Mahindra, if somebody wants to take the entire position or maybe like this week call, then emphasis and Tech Mahindra should be the watch list.
Right. In fact, now I'm just going to squeeze in another query that is coming in from that sector. In fact, Anirban Debnath wants to know view on KPIT. He says it's being quite consistent in the range between 1,470 to 1,520, and this after a good run up that it has seen in the previous years. He's asking what could be the future, targets that he could be looking forward to. So, Brijesh, what would be that for KPIT? Anirban, if he can answer that query for him.
So currently the KPIT is going sideways. There is no technical reasoning why I should be taking a long bet. Right now there is some profit booking, and I believe it is going to see some further correction close to 1430, 1400 marks. So that is the immediate goal. In the long term, 1550 is the multiple resistance zone where the stock has never been able to cross those levels. So we need to keep a watch on. Right now, it's very difficult to say whether those levels will take or not because for me, the weekly, monthly time frame, there is no signals which says that that level can be taken out. But I may go wrong if 1550 is taken out. If 1550 is taken out, then there could be a good amount of range breakout which we seen in this particular stock. And if that is supported by the volume breakout, then we might see good amount of upside towards the 750, 1800 mark. So it's a wait and watch. Right now, from the immediate point of view, there is further correction of 30, 50 points from the current level. So we need to be cautious.
Right. Let me go back to Kranthi, then we have him back again with us. Kranthi, maybe you can finish your view on the IT pack and perhaps also add in on pharma stocks because those ones are seeing quite some bit of excitement as well. In fact, Jefferies has just come out with a note on Zydus Life. They maintain that hold call. In fact, they've gone on to hike the target price to about 1070 from just 750 that it was earlier. And they say Zydus meets their expectations. They see the guidance for FY25 also based on how their US geography has performed so far. They see a strong pipeline for the US in the medium term as well. They've hiked, in fact, the FY25-26 EPS estimates, increased it by about 16 odd percent as well as 29% for FY26 on higher sales and margins, and which is why that counter also seeing some good exciting news coming in even post its results. So Kranthi, just on pharma pack as well as your concluding statements on IT that we are to leave off.
Coming to pharma is concerned, Stacy, the relative valuations looks very attractive on a medium to longer term perspective. As you rightly mentioned, about Zydus Life, the stock has been doing extremely good. The phenomenal earning visibility that led the company to outperform in the medium to longer term. Coming to the overall sector is concerned, we need to see how the next post US election, how things are going to pan out in US is concerned for pharma stock. Pharma sector is concerned overall, but there are going to be stock specific opportunities in pharma sector. One need to be very stock selective, stock specific in pharma sector. Coming back to your earlier question, sorry for my unstable internet. I have been traveling into different places, meeting the managements. The coming to the IT sector is concerned at this point of time. The relative valuations and longer term outlook is good. So investors have a longer term view. They can be with the bellwether stocks. Most probably, if one have to take a contra look at IT companies are concerned, one can add names like Infosys and TCS. And there are some opportunities in the mid-cap IT companies also. Mid-cap IT companies have been terrific outperformance in the IT pack. So here also the stock specific action is needed. But in a longer term perspective, because of this AI theme is emerging at this point of time, one need to take a stock specific call, and we are quite sanguine about the fundamentals and prospects of the IT stocks are concerned on a longer term perspective.
Right. So long term is where we are looking at IT perhaps turnaround. In fact, there is also news coming in that Coforge will be partnering with Microsoft to establish that Copilot innovation. In fact, Copilot is where Microsoft has come out and said that that's where they're going to be focusing on generative AI, for generative AI solutions. So Coforge, they're having that, partnership with Microsoft for this whole Copilot innovation that they plan. That's going to be interesting to see how it really turns out, and that you can see the counter there also seeing some bit of gains in the back of that news. But we also had the likes of an ONGC as well as Oil India that put out its numbers over the weekend. Now, if you look at ONGC, we did see profits grow but just by about 3.8% sequentially, coming in at 11,526, whereas revenues were up just by 0.7%. So just flare, we could say, rather flat earnings for them, but they've come out with a dividend of 2.50 per share. At least this is what ONGC is going to be offering its shareholders, whereas Oil India, we saw consolidated profits fall by about 10.5%, coming in at 2,333. Revenues too have slipped by 4.9%. 9,147 crore rupees is where the revenues have come in, though they have announced a bonus issue of 1:2 per share. So it will be interesting to see how both these counters, ONGC ONGC as well as Oil India are reacting to the numbers per se. But Brijesh, quickly your view on both these counters, ONGC as well as Oil India. How should one be trading this if they are to look at this at the current juncture?
In case of ONGC, the view is positive. It will take a good amount of time, but somebody soon having a delivery position should hold on. 300 plus level can be seen in ONGC. So ONGC is forming a base formation. The breakout is yet to be seen. So definitely 300 plus level will be there. So with the and somebody wants to take to understand the stop loss, then 276, 275. This would be the low. It's a very immediate stop loss. So with that risk, one wants to take the whole the long position that can be done. And in case of Oil India, same like ONGC, the structure is positive, it is not given a breakout. So in the near term, 700 plus level can be seen. So somebody wants to take the long position can also take the long position, and who is already having a position should hold on for the 700 levels.
Right. Quickly then, one last query that is coming in. Kishore wants to know your view on Ircon International. In fact, even a couple of these railway stocks, we saw RVNL hit some new records in that special trading session as well. So among these stocks, firstly, give Kishore an answer for Ircon and also other railway stocks. What are you looking at right now? Brijesh, that was to you.
Okay, I'm sorry. So I believe this momentum is going to continue. The railway stocks, I am liking the railway stock. Ircon was one of my pick in the previous week when 260 level was taken out. So I think this momentum will be there. We can play for same thing, like we can play for 300 plus level in the Ircon. Ircon and RITES are the two bets which I was keeping a watch on. So Ircon, if somebody wants to make an entry, then whenever it corrects for 10-15 points, that is a level one can make a re-entry, because I believe 310, which is a precise technical point, 310 is what I'm watching for the Ircon. So that should be the upside trigger. Luckily, if we get an opportunity of that 10 odd points of correction, re-entry can be made. And beside Ircon, I'm even liking the RITES. So RITES is also at the verge of giving a multiple range breakout at 720 level. It's already trading at 724. I think once we see a very strong close over 720, RITES can also go back to 800 levels. So quite extremely positive on both the counters.
Right. So RITES as well as Ircon are what is on Brijesh's list as well. Quickly, the last word from Kranthi. What are the sectors or stock specific in this a bit of volatile market that we are in until the election results? What would be your pecking order in terms of sectors? And then if you do have any stocks that are really interesting you, what would those be?
Yes, Stacy. At this juncture, we look forward for the consumption stories in India, and also the sectors like infrastructure looks very promising in India. Capital goods have been outperformer, and one of the stellar standout sector is the defense. Look at the defense stocks like Hindustan Aeronautics, Cochin Shipyard, Mazagon Dockyard, BDL. These are the stocks looks very very different at this point of time. They have been the outperformer in this market. Any dips in these kind of names are the very good entry opportunity for the investors who are looking for medium to longer term investment returns are concerned. Defense is a standout sector in the recent past, and also one can add consumer staples also with respect to the disposable incomes, and also the consumer consumption is concerned in India.
Right. So consumption packed, perhaps there are a couple of interesting names there. And of course, defense is something that Kranthi is watching out for. Well, I've completely run out of time. So let me thank both Brijesh Ail of IDBI Capital as well as Kranthi Bathini of WealthMills. Thank you so much, gentlemen, for helping our guests with helping our viewers with their queries as well as giving us some perspective on how we should be trading the markets in the week coming ahead. Well, with that, we're completely out of time. So it's a wrap and goodbye from the entire entire team that puts this together. Thanks so much for tuning in. Do keep posting us your feedback and also your queries that we'll try and take up with our guests to the show. Do write into us, during the live feed, and that's when we'll try and take it up. But also other ways that we can improve, do send us in the comment section below. Well, for all your other updates, stay tuned to moneycontrol.com as well as the Money Control app.